Welcome back. You're watching Big Deal, and with me in the studios is the top team of investment banking at Credit Suisse. So, gentlemen, we were discussing about the deal flows and how the activity has picked up. But talking about specifics, Sumit, where is the maximum amount of activity seen? We've seen pharma grow a lot, IT. We've seen it across the board clearly. Is there any theme which you are spotting right now and working towards that particular sector in particular?
See, clearly there are themes, and each sector has a different theme to it. At a sectoral level, we are seeing far greater activity in IT space. We are seeing in pharma space, definitely in telecom space. And for each there's an altogether different reason and a trend to it. We are particularly seeing in pharma, like for the first time yet again we are seeing that some of the local businesses, their balance sheets have become so strong that it's not anymore just inbound activity, but also the desire from some of the larger pharma companies to do an outbound. Likewise, we are seeing that some of their businesses have become large enough that be it on a branded generic side or XYZ, they are happy sellers also because foreigners want to come and have a play into the country. They are happy to write top dollars.
We saw a Chinese company.
We saw Chinese company Fosun bike land. We ourselves we sold Femicare to Mylan. That was close to about $1 billion check size.
And there are some more deals which are in the pipeline, even from your house.
So we'll refrain from specifics there, but yes, absolutely, you're right. There's a lot more in the making. Likewise, in telecom, there's clearly, you talked about it earlier, I think a couple of days back, about one or two potential consolidation in the industry. We ourselves sold the largest telecom tower business to American Tower, which was a $3 billion plus EV business. So you're seeing, interestingly, for the first time, yet again, I re-emphasize all three forms of activity in M&A, where foreigners are very keen to deploy FDI, writing large checks. We are seeing a domestic-to-domestic M&A, which had practically, last I recollect was before I was born only, 40 years back. And there will be at least 20 such transactions we can talk about. And likewise, we are seeing the desire of some of in certain space, IT, pharma, few others, large industrials, where the desire to do an outbound and write larger checks into, including developed markets, and no longer just an emerging market economy purchase, but we are seeing trends of even going and buying in US.
That we have seen in pharma, it is essential. In IT, in small pockets, it is essential to have a footprint. But like Apollo Cooper, it did not work out. In that form, Apollo could have been a much larger player in that particular space. We are not seeing that kind of fire back in the promoter's mindset, at least so far.
Yeah, so it's very interesting what has happened versus what potentially will happen. And that's where the distinction we see what potentially will happen. And think about it, when you have easy credit available, you have easy equity available at the best valuations, the cheapest cost, and you can't so easily deploy into the country to set up plants and all of that, which takes far longer. So how do you deploy capital? The easiest and the fastest way is through inorganic route, through acquisition. And that's we are seeing far greater conversations. I didn't see that 1.5 years back, 2 years back. But right now, in every boardroom, we are having conversations where we see the desire to show us transactions where we are happy writers of large checks outside of the country as well to acquire.
Okay, that will be a theme to be watched out for. But Gaurav, you're in touch with so many of the international players. Like you did the largest masala bond, the first one, HDFC one. And how receptive was the market to the masala bond, and what is the kind of mindset that the foreign investors have towards India and Indian blue chip companies which are in the market?
The investor offshore largely playing India with respect to interest rates and FX. Never in last foreseeable future past we have seen where interest rates in all the three G3s have been zero. So Europe is zero, US is zero, or close to zero, and so is Japan. India has a reasonably high interest rates with FX stabilizing, all macro parameters on FX looking extremely good. The interest in good credit paper started, and I think we did try this effort 6 months back. It wasn't that successful. There was a lot of work which was done in educating the investor base. So I think we went again in June, July, and that's where we saw the book build up almost what? 8,600 crores versus the issue size of 2,000 crores. So almost 4.5 times of the issue in a matter of 48 hours. And within the first few hours, the book was more than 2x. So there was very strong investor interest, over 50 investors across Europe, US, and across Europe and Asia, and including private banking. So there was a very diversified interest on that paper.
So where is the maximum money is going to flow in from into the Indian markets? Is US now we are pretty certain that Fed rate hike in this particular calendar year is out of question. At least that's been being built in the market. That could be a help. And how has Brexit or the other uncertainties in Europe played out? And which geography is looking most keen to put money into the country?
So I guess you continue to see Asian investors, because even in Asia, I think there's a lot of money in Hong Kong and Singapore, which is looking to find its way. Emerging markets have seen flows in last months, which have exceeded what they've ever seen in probably last 8 to 10 months. So every week we've seen large inflows coming in EM funds. That has driven the entire EM index flow, and India has been a beneficiary of that.
How long will we be the beneficiary of the paucity of other bright spots, and India being relatively better than the others?
You call it the Tina. There is no other alternate. So India is in a good spot.
No, I want to know how long is this mindset expected
I
to
think
continue?
US could be an alternative which could come up, but that's about at this point in time. That's what we see.
So we can be in a good position. For
I think we should make the maximum of what we are.
This is very clear. You look at, like I was commenting, credit market flows are highest. Equity market valuations are getting into the richer territory. FDI in form of M&A activity from inbound basis is one of its highest. So clearly, I think Goldilocks situation continues for the country.
But not so much for the e-commerce sector. Sumit, what do you see there? Are there more downgrades to the valuations expected, and is the consolidation going to be extremely important very soon?
Definitely, but think about it this way, that over the last 4 or 5 years, this particular industry saw capitalization happen very fast. Even before businesses could become larger, capital was preceding some of the growth. And we have seen close to about $30 to $40 billion getting deployed in a jiffy in the last 3 or 4 years. Now, if you think about it from a general markup perspective, that would imply $50 to $60 billion of marked up asset floating around. And mind it, that 90% of ownership actually resides with investors who are not as long-term owners as families are, which means that per force consolidation in this space has to happen. One, driven by the industry requirement itself, and second, driven by the shareholder dynamics as well.
CNBC TV18 had done a story on on telecom consolidation, which was very talked about. Is that the only way to survive in the telecom sector now?
Any industry, I think increasingly India is now witnessing where you don't need to have the 10th operator also for a consumer. So it has to go through that cycle where that nascency is behind us. Be it on the voice side, definitely. On the data side, the battle is still being played out. We'll see who the winners are. And then it settles down into 3 or 4 winners, and that means consolidation has to happen. So whether I agree with the names that you put out or not, but definitely with the trend, yes.
But you did a large tower deal, Vyom one. More tower deals can also happen
100%.
For cash requirements?
100%. It solves for 2 needs. One, the balance sheet of the operator, if it is operator owned, and second is it's a passive infrastructure business where fundamentally the more independent you are, which means that it has to be more consolidated and 2 or 3 players, so that the optimization benefit accretes. So 100% it has to happen.
And what about GST? GST is going to be a reality very soon. Is that going to benefit the overall businesses at large? And does this also have an M&A play in it, which could be a theme evolving in some time?
The trend, 100% again, it has to emerge. GST has inherently the advantages of business level consolidation, be it on the Think about it in Indian context, manufacturing has been so far partly spread all over states based on tax optimization. Distribution has been spread all over different states, again based on tax optimization. Logistics therefore has been spread over accordingly. All of that is not really operationally also required. So either it will get consolidated first at the operational level, and second then at the corporate level consolidation also, whether I need to have necessarily a cement plant sitting in Rajasthan because of certain tax advantages, or in Northeast, or can I actually integrate and where I'm closer to either the raw material or the end consumer. Let me just have it that way. It will be through the consolidation cycle, and it will potentially start first from logistics space, warehousing space, followed by distribution entities, followed by the manufacturing plants, which is a bit more complicated.
All right.
But it's a trend to come.
So Gaurav, will this attract more talent like yourself into the iBanking space now that the activity has picked up?
I'm a markets guy and into iBanking recently. But yeah, I think there is a, like you're seeing financial sector and technology confluence, I think there is a confluence which is happening between investment banking and markets, and both debt and equity are the needs that clients are asking for.
So we call our capital markets as solutions capital and ourselves as solutions bankers.
Yeah. So in fact, we've in fact invested some equity recently in a fixed space.
So not to get into the names, but yes, coming from the solutions capital approach and going deep, I talked about philosophically, we have modeled ourselves around client needs. So as bankers, we're marketing transactions and actually putting capital to use in not just playing an intermediary role, but also taking equity stake along with investors into companies. Which is quite unique into Indian context.
Yes, that could be a new trend emerging in this particular space. But my final question, so is iBanking really back in business?
I think the bonus phase will decide that. But yes.
A very witty answer there. But thanks, gentlemen, for coming down and joining us on CNBC TV 18 Big Deal and sharing your thoughts on the entire deal flow and the deal street. All the best for future deals as well. Thank you so much. And with that, it's a wrap on this edition of Big Deal. But you heard the top investment banking team of Credit Suisse talk to us about the big deals, that the deal pipeline is quite strong going forward in all areas, and especially consolidation will be the theme to play out in many sectors. With that, it's a wrap from me. Thanks so much for tuning in.